What's going on, everyone, and welcome to my guide on how I trade stocks in the market successfully. In this DVD, we'll be going over my entire strategy that I have mastered over the past 15 years. There are many different trading styles out there that people have used successfully to make money in the stock market. It is my goal to teach you my strategy on the market so that you can begin your new career or hobby as a profitable day trader. This strategy has allowed me to have a 90% win rate. In this DVD, you will learn everything you will ever need to know about the stock market and learning how to day trade. Chapter 1, Introduction. Let's begin, guys. Disclaimer. First, I need to brief you quickly on the disclaimer of this DVD. Please note, I am not a professionally licensed financial advisor or stockbroker, so everything I say in this DVD is strictly for educational purposes only, and I nor Mafia Trading is held liable for any risk or losses you may take in the stock market. This DVD is not to be considered advice on what stocks to buy or sell. It is simply an overview on how I personally approach the stock market. Also, take note that past performance is not an indicator of future performance, and trading the stock market can be very risky investment of your time and money, of which may result in losses. It is highly recommended that you take any knowledge you gain from this DVD as a starting point and seek professional advice before making any investments. Purpose of this DVD. What is the purpose? Learn how to day trade. I'm going to provide to you what I've learned over the past 15 years in the stock market. I'm going to shorten the learning curve for you at an easy rate. Get a pen and paper ready. Take lots of notes. If you have to watch this DVD more than once, so be it. Again, thank you so much for purchasing this DVD, and I hope you enjoy it. So, purpose of this DVD. I'm going to show you my strategy that works for me each time. It can yield you hundreds of thousands in profits per year. I'm going to teach you how to build an account slow and steady, learn to profit on the upside and downside of moves. I'm going to teach you why 90% of traders, that's right, 90% of day traders fail in this game. I'm going to teach you why. I'm going to stress the importance of taking losses and when to take a loss. When to take a loss smart, but sometimes not quick. Make learning fun and interactive. I can relate myself to you. I know what it's like to be, new to day trading. You're like a deer in headlights. You don't know which way to go or what to do. First and foremost, don't trust other day traders out there. And definitely don't trust other trading services out there. It's a very, very dirty, cutthroat, sketchy game, and you have to be very careful on who you trust. I'm going to show you visually the points I'm trying to convey in this DVD. First, leave it up to you to, imagine or assume. So I'm going to get right in, hands-on. I'll teach you everything you need to know. Primary focus, risk to reward, how to adapt to the stock market. I'm going to show you long buys and short buys trades. Sell penny to $20 stocks. That's going to be our primary focus each and every single day. Each and every single day we're going to start with a clean slate. We'll never hold a position overnight. We sleep like babies, all snug like a bug, while everyone else is, worrying about their position. If their stock's going to go up, they're going to go down. We don't care because you know what? We're flat. We don't have any positions overnight. We're sleeping good. So the name. Why the name Mafia Trading? This question I get asked every single day. And for those that have seen the movie Goodfellas, go watch it. I kind of went with the name Mafia Trading because you know what? The Mafia to me symbols a family of successful people that have lots of money. They care for each other. They look out for each other. So that's just kind of what I visioned. I want a group of day traders, a family of day traders that we all make money together. We all look out for each other. We all care for each other, and we're all successful together. If you're not part of the family, well, you know what? That's your problem. We don't really care what's happening to you. We care. We look out for each other. So that's, why I kind of went with the name, just because, very family-oriented person. I care for people around me. I look out for them. And, people around me, I just want to be successful, and I want to see them successful and, make lots of money. Why I started this. Why I started an education service. This goes back to where I saw, I saw a lot of people struggling, and I've been in people's shoes where they don't know where to start, they don't know who to go to, they wanted to learn, and it's a very hard, long learning process. I see too many frauds and scams out there that are selling an education DVD for $1,000. It's actually a lot of them, a lot of other services out there are selling their DVDs anywhere from $500 to $1,000, and that's ridiculous. I think I've seen as high as up to $2,000, and just anyone that's new to day trading, they're tight, they're on a budget. They only have like $500 to $1,500. Well, how are they supposed to start day trading if they're spending all their money on these DVDs? Or some trading services out there have multiple DVDs. So they have a DVD strictly for short selling, or they have a DVD for, long bias trading, or they'll have a DVD for, how to use charting in level 2. And the reason they do that is so you keep coming back and purchasing these other DVDs just to increase their sales. That's ridiculous. They're a bunch of scams and con artists. So that was my goal, my mission, is to put together a DVD for you guys that will teach you everything. So it is the first and last educational day trading DVD you'll ever have to purchase and own. And I have an addiction with helping others, and I like seeing others around me succeed and become successful and make money. So with that being said, a little history about me. Life before trading. Growing up, I really wasn't into sports. I didn't want to grow up working the 9 to 5. I had family members that did that, and they bitch and moan every single day. How they hate their office life, how they hate the cubicle life, and I didn't want that. But yet, I had 2 uncles that had a lot of money, and they would drive, nice vehicles, nice boats, big houses, and walk around with bankrolls in their pocket. And I was always curious, like, how much they made compared to my other family members. And I always thought to myself, like, what did they do? How did they have this lifestyle? And I found out that they were in the stock market, that they bought and sold stocks. And a lot of my other family members didn't do that because they thought it was gambling. They thought it was risky. So, I'd ask my uncles about it, and I wanted to learn about it. And they basically taught me almost everything I learned today. So I just turned 15, and I was working a paper route. I was delivering newspapers around my block on my bicycle, rather it was in the rain, snow, or hot summer days. And the reason I was working this route, this job at such a young age, is because I wanted a go-kart. I grew up playing Atari, Nintendo, and one of my favorite games was Mario Kart. So I was like, all right, well, I want a go-kart so I could be just like Mario and drive on my block and throw bananas and turtles at people. So I decided, to work this paper route to get, my goal was to get $600 so I could go buy my go-kart. It was from they sold them brand new at this local hardware store, and my neighbor down the street from me had one. I just was very jealous. I thought that'd be cool to just get a go-kart. I always wanted one. But I also saw that my uncles were making such good money in the stock market, so I thought, hey, that'd be cool to get an early start on that in life. So I told them what I wanted to do with the money instead, and I wanted to invest and do the stocks like they were doing. So they said in order for me to do that, they would need to tell my parents they have to open a broker account for me. So the trading journey starts. I went to my parents, I told them to open a broker account for me with the money, and they said absolutely not, no way, they're not doing it. They don't want to see me lose all my money I've worked hard for. They thought I was going to buy the go-kart. That was, everything was just starting to fail real fast. So I told my uncles about it, and they talked to my parents, and they were able to persuade them to open the account for me. So my parents were like, fine, we'll do it, but he's your responsibility. You're going to watch over his account. So they're like, yeah, no problem. So I funded the account with $580. It was an E-Trade account, and I was basically like thought to myself, how am I going to day trade this account? Like, well, there really wasn't day trading at the time. It was more like I would buy these stocks and I'd let them, pan out. So I'd buy the same stocks my uncles were looking at, and I'd sell it when they would sell their position. So I grew the account small and steady. I took one trade brick by brick. I would just think of it as like taking one step at a time. But the problem was is I got bored very fast, because I would think like, well, if I had the go-kart, I could be driving the go-kart every single day, but instead I'm, all my money's in this, certain stock, and I'm waiting for it to, go from, point A to point B so I can make money. It was nice. I mean, I was making more money, and they told me just be patient and keep growing your account. But the problem was I had major ADD. So I thought to myself, like, I'm not able to get as many shares as my uncles are able to get because they had more money in their account. I'm very limited with my shares. So I was like, man, there's gotta be another way I could do this. So then I thought to myself, well, why not just look at smaller price stocks so that way I can afford more shares? So then I found penny stocks. I'm like, all right, well, what is this? It's like, all right, well, these are companies with really low price stocks. And I'm like, all right, well, I started doing the math. I'm like, well, instead of buying X amount of shares of these blue chip higher price stocks my uncles are telling me to buy, I can buy these stocks and get more shares and get a bigger return if it goes the same amount of range that the other stocks would go. And little be known, I found out like, wow, these stocks move a lot faster with the price than the stocks I was looking at. So I was like, all right, that's cool. Well, I don't have to hold on to these stocks as long as I would with other stocks. So I'd buy and sell in the same day. And my uncles discovered what I was doing because they were monitoring my account. So I remember they called up to my parents' house and they asked to speak with me, and they told me like, no, you're not doing this no more. You're going to lose everything. And I told them, I was like, well, I'm enjoying it and I'm making more money. And they're like, well, it's penny stocks. It's very risky. I told them, it's like, I enjoyed the rush. I want to keep doing it. And they're like, all right, well, we're not watching your account no more. That's on you, and we won't say anything to your mother. So I was like, all right, cool, deal. So I continued doing that. And I mean, next thing I know, my account size grew larger and larger. I just kept applying the same strategy every day of buying, these low price stocks, and as soon as they'd rip up, I'd sell them. And I was very reckless at the time, very, very reckless. I didn't really have a strategy. I was just kind of entering and exit. And at that time, these stocks, you could do that. They were a lot different than what they are today. So after 1 year of trading, I had a total of $22,000. And my parents really didn't know I had that much in my account until they wanted to see everything. So they logged in and they saw I had that much. They got nervous really quick. They thought that there was an error. They called E-Trade and they're like, yeah, this doesn't seem right. They're like, no, he's making this. He's entering and exiting these trades. This is an error in our system. And I told them, I was like, hey, with this money, I never got to buy my go-kart, but instead I want to go buy a sports car. So they're like, well, we don't want you to trade anymore. So yeah, you could go get your sports car. And they wanted me to, I basically withdraw some money. I went to go buy my sports car. I left the rest of the money in there, and they're like, we don't want you to touch the account no more. We don't want you trading no more. Just focus on school, because I was in high school at the time, and I was actually going to my local, I was going to the in-school library, and each morning I would trade in high school. So my parents didn't know that, and my grades were getting worse and worse in high school. So luckily my best friend in high school, he was really big into computers. He was a really big IT computer nerd, and he knew how to hack. So he decided to hack into the teacher's database, and he changed my grades. We were able to change my grades. Well, the problem is because he basically changed them from an F straight to an A plus. They're like, wait a second, how does this jump up so fast? He didn't do it small baby steps. He just went from 0 to 100, and they found out, and they were basically trying to pin it on me. And they didn't know it was him, but they were trying to pin it on me. And I'm like, nah, I have nothing to do with this. I don't know what you're talking about. So they threatened to expel me. And that's when my dad threatened to get a lawyer, and basically created all these waves at the school. And at that point, they're like, all right, well, we'll let it slide. We don't really have any hard proof or evidence. So again, my parents tried to shut down my account, and I promised them, I was like, look, I won't touch it anymore. If I do, you can sell the car. So high school final days. So I promised my parents I'd put training on hold, and that's what I did. Um, I finished up high school, passed with flying colors, got my diploma, and I enjoyed the whole summer with my friends and my family. I never looked at the stock market or touched it. But I did discover from my uncles, because they weren't really trading at all, that summer is very dead. It's a dead market. They would tell me, oh, you sell in May and go away. So it's like, all right, well, cool. Everything kind of, works out like it's supposed to do. So summer was over. I enjoyed it. Went to water parks, went on joy rides with my car, just really enjoyed it. And I thought to myself, all right, well, I'm gonna go back to school. I want to go to college. I want to get a degree in project management. And I went to the local community college. I jumped right in, no breaks. All my friends decided to take a year off. I was like, I'm not taking breaks, because if I take a break, I'm never going to want to go back again. So I jumped right in, went to college, wanted that degree. Problem was I ran into the same douchebags from high school that judged me and were jealous of my car and my success in day trading, because word got around that I was day trading and I was making good money. It was just bad all around. But I really wasn't too happy with college, so it kind of made me depressed and miserable. Where I just felt like I felt like college felt too much like high school, the community college, because I saw all the same people there. So I was like, all right, well, this sucks. So I kind of ventured back into day trading, and I stayed very selective. I didn't trade every single day like I was in high school. I'd, take about 3 to 4 trades a week. I just didn't want to dive back into it. I just wanted to ease right back into it. And trading was doing really, really good. But, college life was pretty crappy. So I decided, this isn't working out for me. So I told my parents I didn't want to do it no more. That I wanted to continue doing college, but I didn't want to go to that college. So I packed my bags up and I left. I went to Loyola University. I moved away to the city, and I was living in the suburbs, but I moved to the city, and I was living the dorm life, and I made a lot of good friends in my university college. I had a lot of free time, a lot more free time than I felt like I did back at home. I had all later classes. So I was day trading in the morning, and my parents knew this at the time. They're like, well, you're done with high school, you're an adult, you can do what you want. So I was day trading in the morning in college, and the profits started pouring in again. They're pouring in again, and I was trading off pump and dumps. If I wasn't trading in the morning, I was in class the rest of the day, and they were really proud of me, because they're like, all right, your grades are really, really good in college. And you're still day trading, so whatever's working for you, just keep doing it. So what was nice about that is I was paying my way all through college with the profits I was making. So I did that all 4 years of college, and I graduated with college with a bachelor's degree. I walked out of there with a bachelor's in project management, and I never went for my master's. I wish I would have, but I still think about it today, about going for my master's. It's not that I would even use it. It's just, one of those things where it's like, if I'm on my deathbed, I want to know that I got all these degrees. And, I still think about it every single day. But maybe one day I'll go back. So with my bachelor's degree, I made a lot of money day trading the stock market. But I thought, hey, I'll actually put this degree to use. So I thought that I'd go try out an office job, work for a company, and see, if it was really as bad as they say it is. So I got a job as a project manager for an electronics company, where I was involved with engineering, and basically I was responsible for doing all the estimating and releasing the project and quoting it and making sure everything was shipped on time. And it was good. I enjoyed it. The cubicle wasn't that bad. It was like a little mini office I had, and I was like, all right, this is kind of cool. I got a little fan set up, and I got a little mini fridge, and if anyone saw the movie Tommy Boy, it's kind of like that, where he's in his office and the little fan and the little Darth Vader hand. It was very, very cool. But I I still thought of the stock market. So I was like, all right, well, I'll just start day trading at work in the morning, apply my strategy. So I started doing that. I started day trading each single morning at my, company, on my work computer. I'd log in my broker account, have my charts up, my level 2, my time and sales, and, I'm sitting there watching the charts and day trading. I'd make more money in 10 minutes than I would working the entire day. And I think to myself, like, why am I even here? But it's like, all right, well, the reason I'm here is because day trading is, the market can always dry up. So I was like, well, why not? I'm making money day trading and I'm making money working, at the office. So I'm killing two birds with one stone, right? Not a bad way to live life. I was basically shorting pump and dumps at the time. So that was my new strategy. I was doing a lot of shorting. It just so happens that I'd be watching the stock market on my computer, day trading, and my boss would walk behind me. He's like, "Oh, what are you doing?" And it's like, "Oh, fuck!" And I'd hurry up and close down my computer, and I'd start to get the stink eye from a lot of people throughout the company. You could just tell, like, I could just tell people like were watching me. It was just very, very weird. So I was like, I got a feeling eventually they're going to say something to me, or they're going to bring me into the office. Sure thing. That's exactly what happened. Busted. My boss walks up to me one day. He's like, "Hey, I need to speak with you." I'm like, "Oh, shit. I know exactly what he's going to say." So they pull me into the HR office, and my manager was in there, and they basically told me, they're like, "Oh, hey, we've been watching you. We walk past your computer, we see you looking at the stock market. What are you doing on there?" And like, "Oh, I'm just looking at the investments my grandpa, did for me when I was a little kid." And they're like, "Oh, bullshit. You're on that every single day. You're trading. You're day trading. You're day trading. You're gonna lose it all. That's risky. You're gonna lose it all." And I was like, "I'm not day trading." They're like, "Yes, you are. We know you're day trading, and take it from us. You're gonna lose everything. You'll lose it all. You keep doing that. You need to just focus on your job." And I'm like, "Well, actually, I make more money day trading than I do here all day." And they're like, "Oh, so you are day trading?" And I'm like, "Oh, sound like shit." So I was like, "You know what? What does it matter? The work's getting done." They're like, "It does matter. You're on company's time." I was like, "Well, how about I don't be on company's time no more? I'll just go day trade it full time in my house." And they're like, "If that's what you want to do." So I was like, "You know what? I'm doing it. Goodbye." And I walked out of there. And I remember when I got home, I'm like, shit, what did I just do? I was like, my big mouth got me in trouble. And I'm like, you know what? Whatever. It doesn't matter. Let's try this career in day trading. So I thought to myself, you know what? It doesn't matter because I have a college degree and I always have my degree in my back pocket. So let's try to do this day trading full time from home. And I started doing it. I've been, started applying my strategy that I, came up with. And, I've been consistent day in and day out using my strategy over and over and over again. I continue to adapt each day in the market. Areas I've improved on over the years was position size. I used to be very, very reckless with my position. Impulsive entries, stubbornness, cutting losses quick, but, cutting them not too quick. So, areas I've had to improve on that I have improved on. So, with that being said, that's a little introduction about me, my life, my history. I hope you enjoyed that. And, with that being said, let's begin and dive right into this DVD, guys. Chapter 2, Stock Market Basics. What is day trading? Day trading is buying and selling a stock in the same day. A lot of people get this confused. They think that, you're holding a position, but really, they get day traders confused with, investors. But really, day trading, you're buying a stock and you're selling it within the same day. That is what a day trader is. Day trading is very, very fast paced. You need a really good, highly demanding strategy in order to survive in this game. Your emotions need to be checked and controlled each and every single morning. This is the hardest thing for new traders. That's why a lot of people fail at this, because their emotions take over, and it's a true test of one's discipline. If you're not a disciplined person in life, then you're going to fail at this really, really quick. So you need to be prepared to sell a stock right away if it flips on you. You got to cut your loss smart, yet not too quick. So a lot of traders, they'll say that, oh, cut your losses quick. Sometimes that's bad, because cut it and then it reverses and it did what you plan on it doing. So sometimes you have to be smart when cutting your losses. Like I always say, cut them smart but not quick. Day trading restrictions. So PDT, you'll hear this a lot. It stands for pattern day trader. What this rule is that any accounts under 25,000 can only execute 3 round trips within 5 days. So what that means is, say if you have a $2,000 account or $3,000 account, and now this applies to U.S. brokers. So if you live in the United States and you have, you fund your broker account E-Trade or any other broker in the U.S. with $3,000, you're only allowed 3 day trades a week. So if you buy a stock one day and you sell it within the same day, that counts as 1. So think of it 3 tickets. Now, if you buy a stock and then the next day you sell it, that doesn't count. That doesn't count as 1 day trade. So because you decided to hold overnight. But if you make a 1 day trade, on a Monday you buy, you sell, and then another one on Tuesday you buy and you sell, and then Thursday you buy and you sell, and then Friday, then you just hit 4 day trades that week, and they'll lock out your account for 90 days. Special brokers can bypass this rule, such as SureTrader, one of my favorite brokers. They're overseas in the Bahamas. Just a fantastic broker, and later on in this chapter I go over the different brokers and the difference between them. So accounts over 25,000 can day trade as much as they want. You can make multiple day trades in 1 day. That gives you the option to do that. Solution is, if you have less than 25,000, is you can open multiple accounts. So you can open an account with E-Trade, TD Ameritrade, Robinhood, so you could spread out your money. So there's different options you can work around. Day trading positives. Capitalize on very short-term profits. Intraday charts provide sooner buy triggers. Intraday charts provide quicker sell triggers, more opportunities. So what's nice about day trading is that you can capitalize on profits in a shorter amount of time. So what would take you longer investing in stocks, you can capitalize that within 1 day, sometimes within seconds and minutes. So those are the positives with day trading. The negatives. It's very, very easy to fail and lose money. A failing day trader who overtrades has a high commission cost. It happens. People get addicted real fast to day trading, and they just lose control and discipline, and they'll have one trade, they'll have a losing trade, then they add another losing trade. It just, it could be, it's either hit or miss for some people. Some people just can't do it. They can't do the very fast-paced action between winning and losing. So that's why they stick to longer term, investments and options. So sometimes you miss out on huge gains because, you're focused on the intraday short-term action. So it really depends. At the end of the day, you got to figure out what is best for you from a day trading standpoint or long-term investing. What is a stock? It's a type of security that signifies ownership in a corporation and represents a claim on part of the corporation's assets and earnings. Best way to think of this is think of bricks on a building. So stocks are like, so you got a company and you got X amount of bricks that make up that building. Now, what is a stock? Think of them as bricks, and you come to the market and you want to buy X amount of bricks because you feel in the future or in that short amount of time that one day they're going to be worth more money and you're going to sell them for a higher amount. Stock market. It's where shares of public companies are issued and traded. It allows investors to share in the financial achievements and losses of the companies in their portfolio. Pretty simple. It's a place that, think of it like your local retail store. Everyone meets up there and trades. Stock market exchanges. So there's different exchanges. You got listed stocks. Listed stocks are NASDAQ, AMEX, and NYSE, which is New York Stock Exchange. And then you got OTCs, which is over the counter. You got OTC BB, which is over the counter bulletin boards. And then you got pink sheets. So any of the listed stocks are, for the most part, pretty good companies. They have to actually, they have to provide earnings and other news. For OTCs is true, Wolf of Wall Street penny stocks. It's very, very dangerous and risky, but they're cheaper cost and you can allow you to pick up more shares. Exchanges. Most trades are on NASDAQ. Many of the pump and dumps are on the OTC exchanges. Pink sheets, they're just trading vehicles, mostly common considered penny stocks. But that applies to all stocks we trade. We think of them as trading vehicles, like a rental car. We just rent them and we give them back. But 99% of these stocks, they end up at zero. Anyone that comes along and tries to invest in these, they're doomed for destruction. Stock market trading hours. So every single morning, the stock market opens at 9:30 and it closes at 4. However, you can start trading pre-market at 4 a.m. to 9:30. 8 o'clock to 9:30 for OTCs. But the problem with pre-market trading is there's always going to be very, very light volume. I never trade pre-market. I never trade pre-market or aftermarket. Just because the volume is very, very light. Sometimes it's hard to get any kind of execution. But usually 8 o'clock, usually about 30 minutes before the market opens, that's when it really picks up and starts moving. After hours trading goes from 4 p.m. to 8 p.m. Same problem, very light volume. Think of it like a concert. That's the best way to think of the stock market is it's like a concert where the concert starts at this time. People show up to the concert beforehand, but there's not much really fun or activity. Just a few people straggling here and there, buying a beer, drinking, dancing, hanging out, and then boom, 9:30 hits, the concert starts. That's what gets really crazy, and then the concert ends at 4 o'clock, and then there's still a few drifters or drunk, hungover people that are just still hanging out in the crowd. So that's the best way to think of it. But like I said, I never trade pre-market or aftermarket. Pre-market and aftermarket trading. News can hit pre and post-market. Earnings, press releases, FDA approvals, you name it. This can hit pre-market and post-market. I always look for higher volume. So, when I build my watch list, I scan for stocks, which I'll show you later on this DVD. That's one of my criteria is that it has to have high volume. So if you see stocks with high volume pre and post market, it's usually because of an announcement. But you have to be careful because with pre-market and aftermarket trading, you have large spreads, and large spread is, so if you got a buyer at $5 and then you got a seller at $5.50, that's a 50-cent spread. That's a huge spread. So if you buy at $5.50, you're instantly down, 50 cents. But again, that I'll go over later in this DVD. So anytime you do pre-market trading or after hours trading, it's just like gambling. It's a good way to gamble. You'll hear this bull market bullish. This refers to buyers. Your buyers are bulls. They want the stock price to go up. So think of it like when you hear bulls and bears, it's because a bull lifts its horns. A bear, stands up and slams down. Bullish is when you believe the stock price will go up. The stock market is on an uptrend. That's why you always hear the bulls versus the bears. Bearish, bear market, sellers. So it's when you believe the stock will go down, when the stock market is on a downtrend. I'm bearish. I'm 100% bear. I love bear markets because I'm a short seller. So usually you wouldn't have a short seller bullish. But a short seller is more going to be bearish. He wants the stock price to go down. And a lot of people don't like short sellers because you want companies and corporations to do bad. Small cap stocks. Small cap stocks are companies with a market cap under 2 billion. Perfect example is DRYS, Dry Ship Company. This one ran from $2.50 all the way up to over $100 in a matter of 3 days. So stocks with a really small, cap are usually the big runners that we look for. Mid-cap stocks. Mid-cap stocks are companies with a market cap of 2 billion up to 10 billion. A good example is Western Union, WU, or Harley Davidson. So these would be your mid-cap stock companies. Large cap stocks are companies with a market cap above 10 billion. You know, Facebook, Apple. So these are considered like the big boys. Blue chip stocks. Well-established large stocks such as General Electric, Walmart, Coca-Cola. Even bigger names than, you know, Facebook and Apple. These are the top dogs. These are the bread and butter diamond ones. How to trade stocks terminology. Long bias traders. So a long bias trader is looking to buy low, sell high. Buying is the act of purchasing a security, and the goal would be for an increase of stock price to sell at a higher level. Selling, the act of selling those same stocks you purchase, and the goal would be for decreasing the stock price after you sell it. How to trade stocks terminology. Short bias traders. Shorting is the act of borrowing shares that you don't own. Okay, so you don't own these shares, and you think the stock price is going to head lower. This is tough for many new traders to understand, but the goal is to sell high and buy back low. You must borrow shares from your broker, you know, and when the stock crashes, your next plan would be to buy to cover. So to close out your short position, you must buy back those same shares you sold previously, and the goal is to buy back lower than where you sold short. Buy versus short visually. So let's go over this visually. So if you're a long bias trader, so you're thinking that this is a bull market, you're looking to buy low, let the stock price rip up, and sell higher. Okay, this is the act of buying and selling. Short selling, which is what I prefer to do, is when the stock goes high and you look to short, and then it crashes and you look to cover. So it's a complete opposite. You could do both. I mean, you could buy low, sell up here, and then right away short, and then cover down here. People do it all the time. But the problem with that is, like, mentally, some can do it, some can't. Me, I can't. I'd rather just focus on shorting 100%. There's some that rather just focus on buying and, you know, longing 100%. But you know, at the end of the day, you gotta pick which one you're more comfortable with. A lot of people are just more comfortable with buying, buy low, sell high. That's what they're just used to. But again, I'm more short high, sell, you know, sell, cover low. Risk of short selling. There's a big risk with short selling. There's unlimited potential loss. So if you short at $1 and the stock goes to $10 or $30, you know, you end up owing your broker that amount. So it can go, you know, sometimes people have a hard time understanding that is, you know, if you short at $1, there's no zero number. So it could just keep going up, and you can owe more money than you can ever imagine. You know, a long position, you can only lose what you put into it, because you got to remember, when you're shorting, you're borrowing. So think of taking out a loan, and you can owe so much money. A long position, like I said, you can only lose what you put into it. So if you spent $500 on stocks, you know, that's the most you can lose. You can't lose more than what you bought, but you could end up owing for what you technically borrowed. So, you know, with short selling, you must be really good at cutting your losses. Buy-ins, you know, you don't get to borrow these shares forever. So if the stock goes against you, you're like, well, eventually it's going to come back down. It doesn't work that way. Your broker could buy you in at any time, so they can automatically cover your position. See, they can't do that for you. So if you buy a stock and your plan is to sell it when it gets higher and it's down, and you're like down like $400, and you're like, well, if I sell right now, I'm gonna lose $400. All I have is $100 left in my account. They can't forcibly sell what you bought, but they could cover what you shorted, because you don't own those shares. You just borrowing them. So usually they buy in after 3 days. But, you know, what if the stock hasn't dropped yet? You know, it's a pump and up. It will go down. You know, what if it goes way up first? So these are all questions that you start to ask yourself. You know, and you gotta remember, when you're shorting, there's interest charges. So that adds up fast too. SSR, it's called the short seller restriction, also known as the downtick rule. You know, happens, you know, within 10%. If the stock moves 10% down, if the stock crashes 10% down within the same day and next, If shorting, you cannot hit the bid. We'll discover the bid and the ask later on this DVD. This can cause the price to squeeze up really fast. So the SSR, just when you're only shorting stocks, you have to worry about the SSR. Actually, I take that back. When you're longing stocks too, the SSR helps long bias traders because it causes the stock price to rip up. But we'll discover that later on this DVD. Short squeeze. A short squeeze is a lack of supply and excess demand for a traded stock. Forces the price is an upward move. Forced buy-ins for short sellers. So when you have a short squeeze, it's the stock price just ripping up really fast, and short sellers getting squeezed out of their position because they shorted thinking it was going to go low right away, and it's going higher. So not only are new traders coming along and buying that stock, but the short sellers are having to buy back their shares. So it's like a double whammy. So you got new traders buying these stocks, trying to buy low, sell high, and then you got the short sellers buying their shares back to cover right away. So you got two kinds of people that are buying the stock, which is what causes a short squeeze. So you have to be very cautious, when you're shorting a stock, that you don't get squeezed out of your position. Averaging down a long position. So what averaging down is when you buy more shares of a stock as the price decreases. So an example, say you buy 1,000 shares of stock XYZ at 520, and your plan is to sell it at 550, but it crashes, and then you buy another 1,000 shares at $3.90. So now you own 2,000 shares of that stock, and you have an average of 455. So what you do is you take 520, which is what you bought your first 1,000 shares, plus 390, and divide that by 2. That gives you your 455 average. Averaging up. So it works both ways, averaging down, averaging up. So let's say you short a stock and the stock price goes up and you get squeezed out of your position. Well, you shorted 1,000 shares at 580 and the stock goes up to $7, and you short another 1,000 shares. Now you have 2,000 shares you shorted at an average of 640. And how you got that was, excuse me, you take 580 plus $7, divide that by 2, you get 640. And that's how you get a 640 average. Volume. Total number of shares traded for a stock on that specific day. So think of it, pretty self-explanatory. This is the amount of shares that were traded for that particular stock within one day. Liquidity is a measure of the ability to buy or sell a stock. Price quickly moves without affecting the movement of the stock price or the range. Related to this is volume. How many trades on the day? The more trades, the more liquid. This makes it easy to get in and out of position. So with that being said is, best way to put this is liquidity. It's pretty self-explanatory, but you want to be able to get in and out of a trade without affecting the movement of it. And so let's say there's only 100,000 shares traded on the day, and you come in and you want to buy 25,000 shares of a stock. Well, once you buy those 25,000 shares of a stock, then it's going to be 125,000 volume stocks traded on that day. Your 25,000 shares will affect the movement of the price. So you want stocks with liquidity. Halt. A stock halt. Any stock in the market can get halted at any time. The two most common reasons a stock will be halted is pending news or for volatility pause. It can reopen at any price. Being stuck in a stock halt is very, very, very dangerous. When the stock is halted, you cannot trade it. You have to wait. You are stuck. A halt pending news can last hours or even longer. There's stocks that I know people have been halted in for weeks. So imagine the stock's going up and you decide to buy at the last second, and all of a sudden, boom, it gets halted and you bought 5,000 shares. You're stuck. You don't know if that stock is going to go open, $3 below what you bought it at or $3 higher. You have no idea. So as long as you're stuck in that halt, you have to be glued to your computer or your phone during market hours, because at any moment, if you walk away, that stock can open and it can affect everything. So very, very dangerous. That's why I don't like holding at the stocks that long. I get in, I nail, and I bail and I get out. Because I'm always afraid of getting stuck in a hold. Float. Float is the total number of shares held by the public, excluding the owners and board members. So it's the number of shares available for trading of a particular stock. So like a low float generally less than 10 million shares. The lower the float, the better the move. So the best way to think of this is think of Apple releases the new iPhone. Every time they release a new iPhone, you get people that end up buying it right away, and they end up putting it on eBay or Craigslist, and they sell it, double the amount of what it would really cost you if you waited a couple weeks and bought that iPhone. The reason is because of supply and demand, which the best way to put that is the float. So only 1,000 iPhones were given to the public. Those 1,000 people that have those iPhones control the movement of it. And you get one guy that's like, I'll give you 1,000. The next person gives you, I'll give you 1,000, 1,100. I'll give you, 2,000. And then all of a sudden the price just rips up. So that's the best way to think of the float. AS, authorized shares. This is the total number of shares a company is allowed to issue. So pretty self-explanatory. Dilution. When a company aggressively issues sells more and more shares as a source of income, this causes the share price to drop. This is very bad. This can, cause the stock price to just drop down because you're issuing more shares to the public. So this will affect the float. So if you have a company that had a 4 million float and they issue more shares, now you have the float becomes higher. So now it becomes, a lack of supply, or I'm sorry, it becomes a lack of demand because there's going to be more shares available to purchase. IPO, initial public offering. This is the first time a company's stock is made available to the public. So a perfect example, Snapchat for the phone. That was a phone app. Okay, it's a company, but it's a phone app. They decided to go public. So they decided to announce, hey, we're going public. We're going to issue shares to the public. The day it had the initial public offering, that stock ripped up to the moon. It went crazy. I forgot what it opened it, but it would move $5 to $10 in one day. Crazy move. Also had a big float. A stock like that's just, sometimes it can be really hard to trade because everyone's just running over each other to try and get those shares because they think it's going to be the next big thing. Outstanding shares, also known as OS. It's the total number of shares a company has issued. Pretty self-explanatory. Market capitalization. It's the market value of a company. So the share price times the outstanding shares gives you the market cap. Reading a stock quote. This is very important. This is what every trader needs to know how to do. So right here at MRTX, this is what we call the ticker or the symbol. It's short for the company's name. So like if this was Facebook, it'd be FB. Perfect example. So it's listed on the NASDAQ exchange. Currency is US dollars. The current stock price is $11.20. It's up for the day $6.45 or plus 135.79%. Previously closed. So the previous day it closed $4.75. That's how you get 6 plus 6.45 times 4.75 gives you $11.20. It opened the day they currently open, so the stock market opened the open price of $9.85. Stock quotes currently tell you the bid, $11.20. The ask, $11.35. So you got a buyer at $11.20 and you got a seller at $11.35. The daily's range. So that means it had a low of $9.15 at a high price of $12.40. 52-week range. So it had a low of $3.23 and a high of $12.40 for the 52-week range. So the daily range, 1240, became the week's the 52-week range. So this would be considered a high day. So this day it made a new higher day for the year. The volume traded on the day was 48,000. No, I'm sorry, 48,000. 48,767,398 shares. The average volume on a typical day is 2 million. So you could see that it traded well over 2 million shares, which is why we had a $6.45 move. So the market cap, 279.662 million shares. Beta 0.90. Beta, PE ratio, earnings per share, earnings. This area right here isn't going to matter this is good for investors, but as day traders, really you only want to focus on the left hand side. And this is reading a stock quote. So this is right off of Yahoo Finance. So that's where you would see that, but you'd see this also on other, stock websites. So it's pretty good education on how to read a stock quote. Very important. Broker/market terminology. Little things to know from a day trading standpoint. If someone told me ETB or HTB, I already know what that means. So this is terminology that you should definitely know, because if you're in my chat room or any other chat room, or you're discussing on Twitter with other traders and they say, oh, check out stock ABC, it's ETB, you automatically know ETB means easy to borrow. Stocks that are easy to borrow. It's importance of checking pre-market. You must have a good broker. You want to know if stocks are easy to borrow. So you need to know easy to borrow and hard to borrow. HTB is if you're a short seller, because you need to know if you have those shares available to borrow. Hard to borrow, is basically means stocks that are difficult to find shares to short. It's important of knowing the right broker. So you want to make sure that you sign up to a good broker that has easy to borrow shares, because if your broker has hard to borrow shares, then you'll never be able to short sell with them if you're a short seller. Trader lingo. Price per share, also known as PPS. It's the current price of an individual security. Previously closed, PCL. It's the price of an individual security that closed on the prior business day. So if yesterday the stock price closed at $5 and I asked you, hey, what was the previous close? It would be $5. Due diligence, short term DD. You hear this a lot from other traders. If you're curious about why a stock is up, what is the current news, they'll just quickly reply to you, DD. I don't really like this one, because I just think it's kind of a asshole, selfish thing to say to someone. It's basically telling you do your own research, don't ask me questions, versus just quickly telling the person, oh, it's got FDA approval. I never understood that, why other traders do that. But I want you guys to know, so if someone ever says to you DD, like, oh, okay, well, due diligence, obviously they're too lazy and have issues with helping me out. But so keep that one in mind, guys. High of day, HOD. It's the highest price of a current market day. So it shows you what is moving in the market. Low of day, LOD. It's the lowest price of the current market day. Yearly highs, 52-week high. It's 52-week highs or lows in a measure traders use. So the current price is at the highest or lowest price of the year. Trader lingo. End of day, EOD. It's a shorthand abbreviation. You hear this word a lot, EOD. What is the EOD? Earnings report, ER. Each quarter companies file a report. If you are overnight a listed security and it reports earnings, you don't have an edge. So what that means is some traders will buy into knowing that earnings is the next day, or they'll hold into earnings. That's very, very, very risky. Perfect example was my uncle was holding options for NVIDIA, and he was up about $22,000, and he had several contracts for options. Instead of taking that $22,000 in profits, he got greedy, decided to hold their earnings. They had bad earnings, and then he ended up losing it all. So I think he ended up selling that position for about $2,000, which, you know, imagine seeing $22,000 in profits and you got greedy and you decided to hold it to earnings. He didn't take it, and then he ended up walking away with only $2,000. So, you know, he basically gave up $20,000. So don't ever hold into earnings. Gap up. Gap up is when the stock opens higher than it closed at the previous trading day. So example, the previous trading day it closes at $1. The next day the stock opens at $1.50. That means it had a gap up of 50 cents. Gap down, the complete opposite. So stock opens lower than it closed at the previous trading day. Example, so the stock market the previous day closed at $1. The next day opened at 50 cents. That means it gapped down. So anyone that had bought the stock or was long $1 and the next day it gapped down, trading at 50 cents, that means they're already down their position 50 cents. So again, this is why you never want to hold a position overnight, because it could gap down or gap up on you the next day. You never know. It's a 50-50 gamble. Red to green, R/G. It's the act of a stock going from red on the day compared to its prior close to green on the day. Typically anticipate this trade long on a recent runner and former runner. So if it's going from red to green, you better believe that it's going to rip up. And this would be what you'd be looking for if you're a long bias trader. Green to red, G/R. It's an act of a stock going from red on the day compared to the prior close to green to red on the day. This is typically anticipating a short base trade here. So this you'd be looking to short because it's going from green to red. So it's going to be tanking. Example, the stock closed yesterday at $1. It opens at $1.05 and it drops to 99 cents. So that would be going from green to red. Daily range. How much does the stock move intraday? Is it a former runner? Is it known of making big moves? Looking at the daily chart. So daily range is what we want to know. Does the stock, is it a former runner? Does it have a big range? And what I mean by range, if a stock trades all day between $5 and $5.25, that means it's got a 25 cent range. That's not a whole lot. We want stocks that can go from $5 to $10 in one day. And to know that, you want to look at the daily chart. So here's an example of Microsoft. This is a 52-week chart, so this would be considered 52. This is the past year, so this is a daily right here. As you can see, there's not much range. So like on this day, you know, there's just, it's not only is a higher price stock, but you could just see by looking at the candle, there's not much range. I mean, right here, this is a pretty good range. This is a nice big candle. So the bigger the candle, the charts with bigger candles are better stocks to trade. Another example, VSTM. See, look at the difference. Right here, big candle, nice candle right here, big candle, gap up. This would be considered a gap up. Big candle here, big candle here. So let's go back. MSFT, Microsoft. By looking at these two charts, not only, I mean, is there a big price difference, but look at the difference. I'm going to keep going back and forth here. See this, I mean, this stock right here would be good for an investor because you can see it's like on an uptrend, but we're not investors, we're day traders. You can see this VSTM that it's known for making big moves. So I would look at this and be like, okay, this is a former runner. This can make some big serious moves. Like this day right here went from $2.40 almost to $4. So I like that. That's the stuff I'm looking for because you get 1,000 shares or 2,000 shares and it moves 10 cents. You know, that's $100, $200. It's quick, easy profits. That's it for that chapter, guys. Chapter 4, choosing a broker. This is the first step to day trading. Opening a broker account. Two things to consider. Margin or cash. Which one do you want to go with? Margin will allow you to short. Margin clears funds faster. Margin lets you use leverage. You know, and make sure you get the market data. Take advantage of live support. So with cash account, you're strictly just trading with cash. Margin, there's a lot more wiggle room. So sometimes think of it like a loan where the funds haven't settled yet. So to do something like this, rather if you sign up with E-Trade or Thinkorswim or SureTrader, you could apply for a margin account. Brokers. Different brokers have different strengths. What features are most important to you? Are you looking for shares to short? Do you want, long-term short? Do you want to avoid the pattern day trader rule? Do you want to avoid, no $2.50 rule intraday? Do you want for OTC executions, lower fees? You must make that choice. I cannot help you. Every broker offers different, variety of different things. Me personally, I have multiple broker accounts because, every broker offers me a different thing. So if I'm looking to short, I might go with one broker. If I'm looking at long positions, I'll use this broker instead. So it really depends on what you want to do. Now I know most people that are new to day trading, they're starting with a small amount of money. They're very limited. So you have to know what you want, and the best thing to do is make the best decision for yourself. Speed Trader. This is my favorite top-of-line broker. Just all around awesome. Best OTC executions. Many different routing options to choose from. Flexible fee structures. Short selling. First come, first serve. So I come to the market, I can reserve my shares to short. The trading platform is actually called DOS. It's DOS Trading Platform. So it's the same platform that is used with SureTrader and Centerpoint Securities. I love it. It's fantastic with hotkeys, low routing cost, and the actual platform, they call it the Speed Trader Pro platform. So just an all-around fantastic broker. The problem is you need at least $25,000 to open this account with them. Centerpoint Securities, again, 2 clearing firms, excellent borrows, great executions, many routing options. They offer multiple trading platforms. There's no $2.50 rule intraday, but the problem is there is higher fees and you need a higher account minimum. You need at least 35,000. Actually, I think they increased it to 50,000. But between Speed Trader and Centerpoint Securities, you're looking to fund them with at least, ideally, Speed Trader is 25,000, but I think they actually bumped up to 30,000. So between Speed Trader and Centerpoint Securities, this isn't going to be an option for many new traders because they're very limited on the amount of money they have. But eventually when you do build your account up, these are both awesome brokers. SureTrader, hands down the best broker for small accounts. It's an offshore broker. So SureTrader is actually the sister company of Speed Trader. People don't know that. The problem with SureTrader is people are like, oh, it's offshore, it's in the Bahamas, it's sketchy, they're taking my money and run with it. No, that's all bullshit. That's not going to happen. Yes, they don't have to follow the SEC's rules, and what I mean by that is if you fund your account with SureTrader, you could day trade every single day, and you might be thinking, well, how can I fund them with $1,000, but I'm allowed to day trade every single day, but yet E-Trade, I fund them with $1,000, but I can't day trade them every single day. It's because SureTrader does not have to follow the SEC rules, as I mentioned before. So, you could break the pattern day trader rule, and you can have unlimited day trades every single day. Like I said, by far, awesome broker platform. The only thing that, can kind of suck with them is sometimes their customer service is easy to get a hold of. It's just time consuming. So, like, what would take a problem to get solved with E-Trade or any other U.S. broker, it might take 5 minutes. With SureTrader, it might take 50 minutes. But the job gets done. You have a 6-to-1 leverage. So, if you fund your account with SureTrader, it's $1,000 you fund them with, you're actually allowed $6,000 to trade with. So it's very, very cool. And they offer short selling. They have a short selling list of over 10,000 tickers. So the short selling with SureTrader is just as good. The only problem is SureTrader, they have higher fees. So the commissions can start to add up really fast. But as a new day trader, you want to get in, make that trade, nail, bail, boom, get out, and be done. Repeat the same process each and every single day to build up your funds higher to 25,000, and then eventually switch over to a U.S. broker. E-Trade, probably the number one known U.S. broker. It's awesome. I can't complain about them. They got a good mobile app. Their pro platform is really good to use. So any new day traders that sign up with E-Trade, you actually get 90 days of the platform for free. SureTrade, Centerpoint Securities, and Speed Trader, you have to pay for the platforms each and every single month. But there are special deals you can work out with Centerpoint Securities and Speed Trader that if you make X amount of trades, the platform kind of pays for itself. But if you sign up to E-Trade, at this very moment, you won't have to pay for 90 days. And if you make X amount of trades a month, then the platform cost is free. So this is a good route to go. They're good for trading cheap stocks. They got good OTC executions. Their short selling, range is from $3 to $10. They have great fast trade executions. And the number one thing about E-Trade is their customer service. It is phenomenal. I will hands down best customer service. They just get everything done so quick. This is a broker I started off with when I first started day trading. It is, I love it. It's my baby. But I don't use it for day trading. I use it more for options. But I don't know. I'm still married to it. So I can't close it down and get rid of it because that's where, I started. Interactive brokers. This is another, good U.S. broker that has very low commissions. They have very good executions, nice and fast. They're perfect for shorting small cap stocks, especially stocks under $2. What's nice about interactive brokers is you can hold short positions past 3 days. So other brokers like Centerpoint Securities and Speed Trader, these you wouldn't want to hold short positions for longer than 3 days, is because they're going to start to kill you with the borrow fees. But interactive brokers, it's definitely the best if you want to hold short positions longer than 3 days. Me personally, I don't do that. For you that know my strategy, I'm in and I'm out each and every single morning. I never hold any positions overnight. But if you want to go down this road and possibly hold short positions for longer than 3 days, interactive brokers is the one to go to. TD Ameritrade. TD Ameritrade is, it's another U.S. broker, similar to E-Trade, but it's not as good. What I do love about TD Ameritrade is they have a platform called Think or Swim. It is by far the best hands down charting software that I've ever used. It's free to use for life once you open an account with TD Ameritrade. So you don't have to deposit anything in the account. You just have to open an account with them, and you get the free free platform for charting. But like I said, it's an all-in-one. So it's like a platform for charting, and they got like the level 2 in time and sales. But just, I don't know. I just feel like it needs to be, from a trading standpoint, I feel like it needs to be updated a little bit better from when it comes to day trading. But like I said, the charting, I love it. It's my absolute favorite. Customer service, again, phenomenal. I got no complaints about TD Ameritrade. So like I said, you could fund TD Ameritrade with 500. E-Trade and TD Ameritrade, you have to fund them with at least 500 if you want to start day trading. Like I said, you can open the account with them, but get the free Thinkorswim charting platform. But the only problem with TD Ameritrade is that it's got very slow executions for OTC stocks. It's nowhere near as fast for E-Trade, as fast as E-Trade or interactive brokers. But like I said, I've never used TD Ameritrade to actually execute a trade. I've only used them for the charting. I open up an account with them, and I'm like, oh, I love the charting, and then I'm like, oh, I'll just use the charting in this, the level 2 in time and sales for this broker, and that's what I've been doing. Broker platforms. Web traders are losing traders, and what do I mean by that? So with day trading, there's 2 ways you can execute your trades. There's either a platform on your desktop that you download and install, or you can go to your broker's website, log in and execute your trades there. The problem with that is a lot of it's not real time. So you're pretty much just entering the stock, putting how many shares you want to buy, how many shares you want to sell, kind of using their little chart. It's not real-time executions. And usually those traders are losing traders. So you have to basically purchase. So if you sign up for E-Trade, you get 90 days free of the broker platform to download. But you know, other broker platforms, it's actually worth the extra money. So, you know, like SureTrader, if you sign up for SureTrader, their desktop platform is like $105 a month. It's right around $100. So don't quote me on that. You know, you get level 2, you get time and sales, you get real-time charting. You're able to have the option of setting up hotkeys. And what I mean by hotkeys is, imagine pressing, you know, F1 on your keyboard and you instantly buy 300 shares. And then you press F2, you instantly sell those same exact 300 shares. That gives you the option with these desktop platforms. You know, you get market scanners with them. It's just all around, you get the whole total package to become a day trader in the stock market. So it's definitely worth the extra cost. You know, it's just not a bad gig to go. You know, you could, you know, take a look at, try the online platform, but it doesn't work very well, and I've never known anyone that's successful at it. Getting started. So what do you have to provide to, you know, so you figure out which broker you want to go with. What's the next step? You're gonna have to go to their website, sign up. You have to provide them identification about you. You're gonna have to provide them your income level, tax information, and then, you know, you need to fund your account. So in order to fund your account, you basically have to, you know, link your bank account to them, so that way you can, you know, direct fund with your bank account. And you know, if you choose to pay for the desktop platform, you know, that's up to you. I highly recommend it. You know, like I said, if you sign up for E-Trade, you get it for 90 days, so it's not a bad gig to try it out and, you know, fund E-Trade with, you know, $1,000 to $2,500 or whatever. You know, or SureTrader. You fund SureTrader, you know, it's $100 a month, right around there. Like I said, don't quote me. So basically, it boils down to $25 a week. You know, it's not bad. So it's definitely recommended. But you know, desktop platforms, the actual layout structure, we will be covering that in the next chapter. Chapter 3, Getting Started, Account Building Emotions. How much to get started with? I get asked this question all the time, how much to start trading with. You have to be smart about this. You have to find the broker, the best fee structure for what you want to trade. Take responsibility. You have to do this on your own. Find the research. Do the research. Don't try and start day trading with $200. Save yourself up enough money, give yourself a chance. You need at least $1,000 nowadays to start day trading with. You know, just slowly save up and give yourself a real chance. You know, don't try and start day trading with $200 because you'll blow that up real fast. Do not fund your broker account with a credit card. That is a horrible idea. I know so many new traders have done that before, and not only are they trying to day trade, but they're feeling pressure because now they're paying interest every single month on their credit card. So, you know, they're trying to push forward fast to try and make that money back so they can pay their credit card off, and yet they still have money to day trade in their broker account. Just all around, it's a bad idea. Do not borrow the money from a friend or family member. I knew a day trader that did this. He actually approached his friend and he asked his friend to borrow $800 to pay a medical bill, and he funded his account with that $800 and he started day trading, and the next thing happened was he blew up his account. He shorted the stock and he got squeezed out. And actually what he was doing is he was actually using all 100% of his buying power. So he pretty much was, you know, shorting everything, as much as he could with that $800. And the next thing you know, he blew up, and he asked me, what should I do? My friend wants to see, you know, the receipt that I paid this medical bill. I'm like, you just gotta be honest with them. And from what I heard last, it basically ruined their friendship, and his friend just wants the money back and wants to be done with them for lying to him. So you don't do that. That's a fast way to ruin a relationship with a family member or a friend. The learning curve. 99% of new day traders won't find success right off the bat. All great traders I know blew up at least once. It's important to trade small early on. You don't want to blow up, your account so fast, where there's no way to recover. With me, I was self-taught. I was pretty much all self-taught, and I spent hours, reading at the library and studying online. And you could easily do that too. Go to the local library, rent, get some books, rent them out, and just keep studying. Knowledge is power. Like I said, just a lot of great traders I knew blew up their account at least once, and don't be surprised if that happens. That's why you want to start with a small account, but not too small. But to the point where let's say you fund your account. Let's say you fund your account with 25,000, and you blow that up. That's a lot worse than funding your account with 2,500. $2,500. It's a lot of money, but it's a big difference compared to 25,000. So just take it very small and steady. Money to make money. Unfortunately, trading requires money to make money. Where are your monthly bill payments coming from? Are you able to pay your monthly bills and yet still fund your account? Or are you holding off on paying your monthly bills to fund your account to day trade to try and make money to pay those monthly bills? Don't do that. That's a horrible idea. Basically you're pulling profits out to pay your bills. I know a lot of people that do that. They'll put all their bills on hold and they'll fund their account with that money, and their plan is to go forward paying their bills with the profits they're making, and they're basically putting all their eggs in one basket, and that's just a horrible idea. What happens if you have a losing month? How are you gonna pay your bills? The next thing you know that they're gonna shut off your internet, and now you don't have internet to pay to day trade, and you don't have the internet to withdraw those funds to pay your internet. So it could just put you in a real bad situation. Allow your best thing to do is allow your account to grow, so your profits can grow. Pulling money out, large expense. Hold off on buying that Rolex. Now, I know a lot of people see other, day traders, buying Rolexes and cars. Don't just get discouraged by that. It's good to reward yourself if you find success. But don't set yourself back too. If you had an awesome day, awesome year in the stock market, just be smart with the money. Don't be splurging on stupid stuff. And just remember that whatever profits you make in the stock market, there's taxes. Most people overlook this. It's going to come from your accounts, and you have to, it could cripple you. So you have to take in consideration taxes, so just keep that in mind. Scaling up size. Consistency. Most important factor. Did your account grow from one or two big wins, or did your account grow from a high win rate? Are you swinging for the fence each time, or are you taking small profits and slowly building up that cushion? Or are you just stepping up to the base each time, aiming for a home run? So, save size for where you're confident. Waiting for the best setup and basically be a sniper. Aim small, miss small. So different setups are worthy of different size. So keep that in mind. Overcoming emotions. Establish self financially first. Don't trade for the money. Too many people come to the stock market looking to trade for the money, and to me, they're just gamblers. They're just looking to get rich quick, and that's a horrible idea. People say they're not going to do it, but they end up doing it anyways because they get a taste of the profits. So they'll make their first day trade and they'll be like, oh my god, I just made $100, $200 within 5 minutes, and everything that they learned and studied just went out the window, because the next day they come back to the stock market expecting to make another $100 to $200, and they start to push themselves, and then the next thing you know, they blow up real fast. So pressure to make money leads to losses, so always keep that in mind. It makes cutting your losers very hard. you have more patience when you're in a losing trade than you do, while in a winning trade. One thing that helps me is I hide my unrealized profit. So, I don't ever. So I trade off the chart. I trade off the setup. So what I mean by that is if I enter a stock, there's no way for me to see what my losing position is because I don't really care about that. I'm trading off the setup. So all I need to know is my position size. So I need to know how many shares I have, how many shares I own, whether I'm short or long, and where I entered, and where I'm looking to exit. That's all I care about. And after I complete the execution, then I'll look at my profits. And a lot of people are like, wow, that's kind of crazy, so it can go against you, but I'm confident with my setup and my strategy. This has really helped me keep my emotions in check, and I definitely recommend anyone new to day trading to try this out. You stop worrying about the money, start worrying about the chart. Like I said, it helps a lot, so it's something to think about. Admitting when wrong and cutting a loss. Hold and hope is not a strategy, okay? Do not hold and hope. The minute you start going to message boards or asking other people what their thoughts of the stock or what they think it's going to do, you're in the trade for the wrong reasons. You got to ask yourself, is the stock doing what I expected and planned for? Best thing to do is remember the times you had a big loss, holding through grinds. Grinds will kill you. That's a horrible idea. So perfect example, if the stock rips up and you short it and it doesn't pull back right away like you planned, but yet it starts kind of grinding, consolidating, right then and there you should cut it off. But if it starts grinding up more, you're like, it's going to come back down. Then you look to add, and then it grinds up even more. You're like, okay, you look to add again, and then the next you're wishing you would have got out, when you knew you should have. So just cut them off quick, cut them off smart. Grinds will kill you. Trying to make back a loss, it's just that will kill you too. So the best thing to do is, time off works best for me. Walk away from the computer, take a day or two off, clear your mind, clear your head. FOMO. This is something you guys are going to hear a lot, and what it means is fear of missing out. It often leads to impulsive entry. So, you'll see a stock rip up, and you're like, oh, I wish, oh, I missed it, and then you'll jump in because you don't want to miss the meat of the move, and that is horrible. Sometimes you're like late to the party. So just fear of missing out. Just be patient. If the trade is not there, if you miss the trade, just don't worry about it. There's gonna be another trade tomorrow. Sometimes a bad entry is very tough to be comfortable in. So just fear of missing out. Always remember that. You will miss plays. It's better to miss out than to lose. So develop good habits. Like I said, the stock market each day, we wake up, we approach the market, and history repeats itself. There's these little shit plays, shit stocks that are gonna just, basically repeat themselves and rip up and fade off down, and that's what we take advantage of each and every single day.